What if I told you there's a legal way to avoid taxes 3 different times with just one account? Most people overlook the HSA, but it's one of the smartest tools out there to lower your tax bill, grow your savings, and pay for health expenses tax-free. If you're on a high deductible health plan, this could be a game changer for your finances now in retirement. Over the next couple of minutes, I'm going to go through a couple slides and then at the very end, show you an example of a tax return that shows the 3 tax benefits that most people miss with the HSA account. If you have any questions, leave them in the comments below. Thanks again for watching.
All right, so I'm going to go through a couple slides here on the benefits of an HSA plan. So question is, what is it? So the health savings account, which is what the HSA is, it's a tax advantage account for medical expenses. And it's only available to individuals with high deductible health care plans. So the next slide, I'm going to go through high deductible health plans. You can contribute pre-tax dollars to save or invest for future healthcare costs. Funds roll over year to year, so it's not a use it or lose it policy. There's a lot of fringe benefits out there that companies offer their employees. But with an HSA, you can put money in. If you don't take money out, the money continues to grow. You don't need to use that money in the year that you contributed. And that's one question that I get a lot. So just make note of that. It can be used tax-free for qualified medical expenses at any age. After the age of 65, the amounts can be used for non-medical expenses. So like your IRA. So what is a high deductible plan? So health insurance plans with lower premiums and higher deductibles than traditional plans. So to qualify for an HSA in 2025, your plan must have a minimum deductible for an individual $1,650, family $3,300, and the maximum out-of-pocket limit $8,300 for individuals, $16,600 for a family. And you must not have other health coverage, excluding certain types of dental and vision. So this is key. And if you're kind of questioning whether you have one, just talk to your HR department and they'll be able to let you know what type of health plan. But you want to make sure that it's a high deductible healthcare plan. And another question that I get that I'm not going to cover in the other slides is, all right, my employer has a high deductible plan, but they don't have an HSA. Can I set one up outside of my company or your employer? And the answer is yes. So you can kind of set these up wherever you can set them up. So if your company can't set them up for you, you can do it outside your company. So tax advantage number 1, tax deductible contributions. So contributions to your HSA are tax deductible, reducing your adjusted gross income. So I'm going to show you that at the end of this video, an example of a tax return. If you contribute through payroll, they are pre-tax, meaning no income or payroll taxes. Contributions can be made by you, your employer, or both, and you still get the deduction. Contribution limits for 2025 tax year, which is the year we're in right now, is $8,300 for family and $4,150 for individuals. That doesn't necessarily mean you have to contribute all that during the year. We've seen some people just contribute, $4,000 for a family. They still get to deduct the $4,000, so you don't need to do the max, but this is the limit. So you can't put in $9,000 for a family. And then when you're age 55 or older, you can do another $1,000 on top of these contribution limits here. So that's the tax advantage number 1. Tax advantage number 2. HSA funds grow tax-free through interest, dividends, and investment gains. Many HSA providers offer investment options similar to IRAs and 401ks. And this bullet point right here, this is one that a lot of people, I think, don't consider or don't think about. So they think it's, oh, my money sits there, it doesn't grow. No, it grows. And that's kind of the beauty of this. No capital gain tax, no dividend tax as long as the money stays in the account. Growth can be long-term, making HSAs a powerful retirement planning tool for medical expenses. So for those of you that are younger, this is the time to kind of build up this account, knowing that, as you age, there's going to be, higher medical expenses. And then think of it like a tax shelter investment account tied to your health. And then the final slide here, tax advantage number 3, tax-free withdrawals. So withdrawals are 100% tax-free when used for qualified medical expenses. covers a wide range: doctor visits, prescriptions, dental, vision. You can use the funds anytime, no expiration or deadline to spend. You want to make sure you keep your receipts. You can reimburse yourself later if you get paid out of pocket. So this is key, right, to kind of support all this. And then after age 65, you can withdraw for non-medical purposes, like tax like a traditional IRA, but no penalty. So that's the HSA, and they're known for these 3 tax benefits. Now I'm going to show you a tax return to kind of show you where it shows up on the tax return. And in the example, I'll show you the tax savings by this family making that contribution. All right, so here's the final video. Here's a tax return 2024. Okay, I know we're in the 2025 tax year, but just want to kind of show you how this all works. So here's the page 1, and you can see here total adjustments to income. This line number 10, this is where we're going to see the HSA contribution fall. So right now, this tax return does not reflect them making an HSA contribution. So you can see their adjusted gross income is $412. Their taxable income is $365. So your adjusted gross income is $412. They get to take some further deductions. Taxable income is $365. This is the amount that's subject to tax. The tax on that is $73,000. And then the total tax is $72,000. And then there's, they're withholding everything. So we're going to kind of take a look at this amount right here, and kind of watch this kind of decrease. So, we're going to go to HSA, and we're going to say that they made a $7,000 contribution during the year. Okay. So let's go back to page 1. So here's that additional $7,000 showing up on line 10. That reduces their adjusted gross income. That also reduces their taxable income. And then if you remember here, total tax, that was around $72,000. That decreased by another $2,000. So this is a deduction, which means that it doesn't reduce your tax dollar for dollar. But you can see they put in about $7,000 and it reduced their total tax by $2,000. So that's about, a third or so. But everyone's different. So you can't say, okay, if I put in X, a third of that is my tax savings. But there is some tax savings there. And then the tax form connected to that is, the 8889 here. And here's their health savings account. You can kind of see here the $7,000. The most they could put in is $8,300, and they were able to deduct the $7,000. So, if you haven't considered the HSA, please do. We process a fair amount of tax returns each year, and I'd say maybe 15%, 20% of our clients kind of take advantage of this. So there's a lot of opportunity to kind of look into this. And like I said, you don't need to put the entire amount in, but something in there is better than nothing. Thanks for watching.